Hello again, traders, and welcome back to the Pro Trader Network. As you can see, this is part 5 of our market structure video series. And in this video, traders, we're just going to do some quick review of what we looked at in part 4, and that is market harmonics. I noticed a very interesting situation that was occurring on the Aussie US dollar, and I wanted to get right to the charts today. So let's go through some very quick review, and then we'll get right to our charts and take a look at more market harmonics. As we looked at, traders, in part 4, we know that price action repeats itself over and over again, and when we observe this movement, we see that the market can move symmetrically both in distance and in time. We call this repetition of symmetry market harmonics. We label these moves with letters and define them as legs, and as we previously discussed, the most common pattern that we observe and that we label is called the ABCD pattern. Here's our ABCD pattern, traders. We have an impulse move A to B, we have a retrace from B to C, and then we're looking for the C to D leg to equal the A to B impulse move. And in this particular case, looking at the left side of this particular slide, we would buy at D after the completion of the ABCD pattern in a downtrend. Moving to the right, we would have an impulse leg AB, a retrace from B to C, and then a continuation from C to D that equals the distance and approximately the time of A to B. And in this particular example, we would be selling at D. So let's get right to that Aussie dollar chart. Alright, traders, you're looking at a zoomed out version of my Aussie dollar 4-hour chart, and as you can see, looking at the right hand side where we made our bullish rotation right about the end of May to June, the week of May 28th to June 5th, we have a bullish rotation. Let me pull my cursor down. We have a TLR rejection trade. We go up. We have a double top here that creates some bearish divergence, a sell-off back down to our trend line, and then we just keep this upward trend heading up to current price action after non-farm payroll yesterday to the 1055.57 level. But let's pull in our trend line and take a look at the market harmonics that has occurred on this particular rally. Let's start right here. We have an impulse leg, our A to B, and our completion of that pattern here, our B to C. And again, traders, not an exact science, but pretty close. The market reverses at that completion of C to D. Now let's look at this retrace. We have our retrace from here to here, our new A to B, and back down here, our C to D completes right at the trend line, almost an exact duplication. AB equals CD. That's our market harmonics at work. Let's take a look at this next pattern, pretty much considered a 3 drives pattern as we call it. Not exact, but pretty close. Our A to B leg. Here we have our C to D leg that breaks out and closes above, creating a new structure high. We have a very small retrace right here, just like our B to C leg. This would be our D to E leg, and then E to F right here on our 3 drives pattern. Let me just double click here, traders. We'll pull that equidistant move and look at that beautiful 3 drives pattern. Let me pull that back so we can duplicate that move. But notice this market harmonic so far all the way up this entire trend. Here we get another move down. We actually get a bearish rotation that's held off at this previous level of resistance right here that the market has tested 1, 2, 3 times. Again, just looking at basic price action here, traders, this is the kind of stuff that you have to begin to recognize so that when you see this happening in the market, you're not panicked, you're not confused, and you're not frozen. So I highly encourage you, as I've said in all the videos, to zoom out and begin to identify these just as we're doing here by simply pulling down our trend line, looking at market harmonics and labeling some of these moves. And again, this is not an exact science, but it certainly will give us the confidence when we open our charts that we can read our chart effectively and know how to attack the market without feeling confused, panicked, or having analysis paralysis. All right, let's take a look at some more market harmonics. We have this particular move right here. Now remember, we can have ABCD moves that encompass these other shorter ABCD moves. In this case, this is a 3 drives pattern. Let me just show you what's been happening here on the Aussie. Swing to swing, swing to swing, swing to swing. Talk about market harmonics, and let's take a look at these big retraces here, traders, from right here to right here. And again, we're looking at distance, pretty close right there, not necessarily in time but in distance. But look at this market harmonics right here, right here, and then we have a reversal where that CD pattern AB, sorry about that, AB, B to C, C to D, market reverses, continuing this symmetrical move. Let's take this, put it right here as we did before, so we've got distance, not necessarily time, and let's take this. And now, where is this likely to go? Have we reached a new structure high here? Yes, we have. We're actually forming a double top, and what I'm looking for here after this big rally is potential bearish divergence. If we retest this high, let's look at our support and resistance. We've got significant resistance right here. If we look left, right at the 155, 50, 60 levels. If that holds, I would be looking to get short here on my 1 hour or 15-minute charts. So I would be doing my top-down analysis just as we've done on this 4-hour chart, looking back on my smaller time frames, of course, waiting for a valid signal and looking for a short sell counter trend. That's only if you're a counter trend trader. If you're a trend trader, where is price likely to go next? Well, let's pull in our fibs. I'm going to zoom in and we'll see where price might be most likely to go if this rally continues. But before I pull in my fibs, I want to pull in some more support and resistance lines at some key levels here. We're just going to get in this zone here, previous resistance, and let's put another one up in this level. We've got some previous resistance, as you can see right here. So now let's zoom in and take a look at our fib. All right, traders, let me remove some of these trend lines that we've drawn. And let's pull our fibs in to this last rally that created this new structure high. Swing to swing. And we got down here at our 382. So we've tested that a couple of times, and we know that a 382 retracement has a high probability of an expansion up to the 1618. Let's pull our expansion tool in, and our 1618 really has no confluence right now. Now I'm going to zoom out to my daily chart, traders. Bear with me. All right, traders, here we are on a daily chart. Let's pull our fibs in. Let's see if we have any confluence. Well, we've blown right through the 786 level, and I don't see any confluence up here, traders, other than this previous very strong resistance level at the 10857 level. So where is price most likely to get hung up? I see it right now struggling right here. We've got some doji type candles right here at the 1055 level, as we've talked about. Let's go back to our 4-hour chart. Okay, traders, looking right now, looking for this double top with possible bearish divergence. If we get a sell-off, where is price most likely to retrace? Well, we've pulled in our fibs here. We know we've been at the 382. Let me get rid of this daily fib, traders. Where is that fib? Let me find it. We'll get some clean fibs on here so we can take a look at this. We'll leave our fib expansion on our chart. Let's pull a clean fib in right here like we had before. Now let's take this retrace that's been creating market harmonics, and we would look most likely for this market to retrace down here to the 618. That's what I would be looking for as a potential final profit target. If I got short here off of this 4-hour chart, I would look for my entry on a 1-hour chart. I would take half of my position off at the 382, move my stop to break even. My stops would be here above structure. Move my stop to break even after achieving target 1 at the 382, and then I would look to take my profits off right above this 618 level. So again, we have to use our conditional thought process. I'm going to squeeze this chart down, traders, so we can take a look at our fibs up here in the upper right hand corner. So I say if the market creates a double top and bearish divergence, then I will be looking to get short on my smaller time frames. If the market continues this rally, where is it most likely to expand? I would be looking for the market to get hung up right at this previous resistance level at the 106.50s. Then I would look for price to get hung up here at the 1414 level with confluence of previous support and resistance, and then somewhere right around this 1618 level as well, off of this 382 retracement with somewhat of a confluence or a range here at the 10830s. So that's our top-down analysis looking at market harmonics. I want to bring this up, traders, because doing this analysis, this video is about 12-13 minutes, and we just performed a pretty in-depth analysis, but this only takes 5 to 8 minutes, as we've shown before, when looking at several pair on our chart. So we want to get into this same habit. We want to notice the rhythm of the market. We want to notice price action, and we want to be able to look at this chart and prepare ourselves for either condition. If the rally continues, where can we look for price to get hung up? Well, we know it's previous levels of support and resistance and confluence with those Fibonacci expansion areas. If price breaks above and closes above the current structure highs, and if the market sells off, where is it likely to go? We can actually pull some support and resistance levels right back in here. Market will most likely retest right in here, right above our 382. And then what's going to happen? Look at right in here, like I said, right around that 618 retracement from this impulse leg up, creating this potential double top. Most importantly, traders, is we wait for the market to tell us what to do. We wait for our valid signal. Patience pays. Always remember. So this is how we incorporate everything we know about market structure. Key levels of support and resistance, market harmonics, we pull our fibs in, retracement and expansion, and now we're prepared for either scenario, either a continued rally or a sell-off. If this potential bearish divergence plays out, I would look to get short on a smaller time frame. Remember, traders, what do I see? What does it mean? What do I do? Well, what do I see? I see a potential rally up to the 141 where it might get hung up, and then to the 1618 at previous key levels of support and resistance. I also see a potential double top creating bearish divergence. What does it mean? Well, it means I need to be ready to get long if previous structure is broken, a break above and close above these key support and resistance levels at current price action that potentially is forming that double top. If a double top is formed and is held off at this 105.80 level, 105.90 level, it means that I'll be looking to get short on my smaller time frames when I get a valid signal. What do? I've done all my preparation work. All I have to do is be ready to act on a valid signal without hesitation per my trade plan and trading system. And eventually, traders, we do want to be able to trade pure price action. For some of you newer and beginning traders, I wouldn't expect you to be able to do this analysis. It takes a lot of practice, which I encourage you to do. But this is the value of actually starting off with systems trading. You get a signal, you act on that signal. Repetition, no emotion, no subjectivity. Once you have that kind of practice and your reticular formation is formed, you can just simply see and do. See something on your chart, react to it appropriately, without confusion, without hesitation, and without analysis paralysis. And in conclusion, traders, we know that our ABCD pattern is going to help identify trade opportunities in any market for any time frame. You can use this on any type of charting platform. any market, these patterns repeat themselves over and over again. We know that these are high probability trades because an impulse leg followed by a retrace is going to suggest that another impulse occurs. In other words, traders, these patterns are going to repeat themselves. Each ABCD pattern itself can create significant levels of support and resistance, as we just showed on our Aussie dollar 4-hour chart. Each ABCD pattern can signify the end or reversal of a trend or market momentum, and the ABCD pattern can be used in conjunction with other patterns and strategies for stronger trade signals, as we've just demonstrated by introducing support and resistance lines and our Fibonacci tools. All right, traders, once again, great to have you here at the Pro Trader Network. As always, let's stay focused, follow our rules. We'll see you next time.